So in this video, what we're going to do is quickly review the VIX. We're going to look at the SPY, QQQ, IWM, and then we're going to give you a little treat where we're going to give you a peek into the new app that we've just developed here at Bootleg Macro. So the first thing we're looking at is the VIX, which I think is got some interesting signals that I want to point out. Now, the card you see in front of you, this is the stock that we're looking at specifically right now, the VIX. Across the top here, we can see the rolling returns based on that look back period. We can see that we do have a future price path, which is based on correlation to volatility and the general sentiment. Now, you don't want to think about sentiment too much on something like the VIX. The VIX flips back and forth, so the bullish and bearish sentiment here really means nothing. But we do want to see, essentially, if this responds to the way the trade range lives. So if you look to the left here, you can see that we've got this black trade range where we've got red lines at the top, which is the top of the range, the green lines at the bottom of the range. The VIX is right around the bottom. It closed at 1443 yesterday. It's very interesting to see what it is. The main difference, though, that I want to point out is on this section here, just in this little section that I keep on this trade card. And this trade card is related and can be changed for any specific stock. But the thing that section there does not change because it's only based on the VIX. And what I like to see is that we have risk on, risk on, risk on, and a VIX falling bear. I'm going to point out exactly where this is and why this is important to me right now. This is the daily data that we're looking at. This is where the data for the VIX is coming from. And right now, if you look at this long stretch of time that we've seen, essentially in the ultra fast indicator here, which if you kind of either freeze or just look at the video, you'll get a pretty good idea of what I'm doing here. You look, we got a VIX warning on the 28th of July. That was the last time that we lost our risk on momentum. Since that moment, essentially the stocks have gone relatively down. You did have a couple of days up until like August 2nd, because I think there's a little month-end markup at the end of July. But what you've essentially seen since then is essentially negative returns. And what we see now suddenly is we're getting a pop-up of risk back on across the board. We're getting go shorts in the short term, intermediate term, and longer term of the VIX. Now, again, I don't think you should do technical analysis necessarily in the VIX, but it's just something I want to point out because I'm seeing a difference and a change in what we're looking at in terms of how the market is behaving. Because we've seen essentially for the past month, completely past month, because today is the 30th of August. So essentially the entire month of August, we've had negative rolling returns and the VIX has been incredibly aggressive. You can see that we have 1 month rolling positive returns here since it looks like the 31st of July, excuse me. And that isn't a coincidence when you think about the type of price action that we've seen recently. So I like this. Now we're going to take a look. What I do want to take a look at is I do want to change this just to see if we can take a look at the SPY. And the reason why is because that's the next thing to look at that in the video. So what we'll do here, this is just going to populate now that we've entered the SPY. This is going to populate with the same data. We already covered what this is, so we're going to see that the SPY is at $449. It hasn't moved yet today because the market is not open for a few more minutes. It's rolling positive 5-day, 15-day, 1 month. It is negative, but slightly. We do look at the trade range on the side. It looks like we're at the very top of the range, which you'd expect, again, because if you look at the inverse of where volatility is at the bottom of the range. So in theory, you could say that this might be a great place to short because you'd expect that the vol would go a little bit higher, but I am not quite sure. I am curious to see if this will take over because we've been talking about it essentially since the end of July right here. We've been on a down move. There's been nothing but down until the 18th, and now we've essentially moved up, which has been really nice to see. And we want to know if we can respect and trust this move because we can see that we're still negative on the 1 month, which has been going on since the 8th of August. We really flipped on that 5-day rolling negative on the 2nd of August. We have been positive for a little bit here. We do now have on the SPY a true go long signal, as well as across the board, we're going to be bullish as of tomorrow if the prices hold. This is obviously the price that's closing right now is going to impact what those indicators are going to say for tomorrow. So we do want to see kind of how the price moves. But right now you've got this go long that's coming in that's from yesterday's action. You look like you're going to have probably a rolling return of a rising bull. The data hasn't started populating yet today, so you can't impact it. But you'll probably get a rising bull back if the VIX stays low. We don't have anything specifically we want to pay attention to on the trading signals here because we just don't have data yet. So we'll look at the Qs. The Qs as well, this is going to give a great indication of how the overall market's going to move. I think the Qs probably have the best. They have the greatest snapback ability. They're more or less what I would consider like a rubber band. You know, they're pretty elastic. They have extreme moves higher and lower. So we can see here that we're a little bit higher than the range right now at 374. We're positive across the board though. 5-day, 15-day, 1 month, 3 months, 6 month, 1 year. We are positive. The NASDAQ has definitely shown its strength recently. Now, if we're going to look, we'll go back. It does look like, again, we're seeing ourselves a little high on the range, but we are going to break up above the 5-day moving average, and the 5-day is going to be back up above the 23-day moving average, which is huge. That's really important. It hasn't had that kind of a move in a while. You can see here this column, column L. This is the one that I believe is running when the 5-day moving average is above the 23-day. It's a good signal. It flipped here May 3rd at $317. Excuse me. It went negative here at 367, and now it's starting to flip back potentially higher. So you want to respect that. That's huge. You see you got some go longs in the short term. It looks like we've got some bullish action in the short term trend. We'd like to see 2 days in a row of bullish action on the longer term trend because that's what we respect. We are very much bearish right now on the Qs just because of that trend. We're probably going to get, so yesterday we did confirm a rising bull. So that looks like we're going to get some good movement here in the Qs going higher. We'll want to see how this all shakes out over the next few days, but I do think that this is a good look for the Qs. I think it's a great look for IWM as well, potentially. We'll just see. We do want to see the underlying parts of the market really rally too. The reason why is because you want to see that the market itself actually has breadth. And the IWM is just not showing the exact same thing. What's interesting is that the IWM is so mixed, right? You're positive on the 5-day, you're negative on the 15-day and the 1 month. You're still positive on the 3 month and 6 month, negative on the 1 year. You can see we are not necessarily at the top of the range. It's at 188 is where we closed. The top of the range is at 191, which is good to see. So you still do have a little bit of upside there. So if you got some follow through, that'd be very, very positive. I am interested because the correlation to the VIX right now is a negative 50. So the VIX is going to be going down, which is what we expect. We expect the VIX to continue on its way down. Then we would expect that this is potentially going to be a decent setup for this. And I'm actually going to go back and just look at the correlation between the SPY and the Qs. I want to see which one is more negative. So remember that it was negative 51 for IWM. It's negative 74 for Qs. Okay. Or for SPY, excuse me. Negative 170 or negative 74 for SPY. That's nice to see. The reason why that's nice is because you know where you really want to get long. If the VIX gets crushed, if something really good happens, or maybe something bad, depending on how the market's going to react to news these days, I guess. This is the SPY is really where you want to be. Now what we're going to do, since we've made it through the VIX review, the SPY review, the Q review, and the IWM review, what we're going to do is we're just going to very quickly look at this new trading app that we've made here at Bootleg Macro. This is going to be part of a subscription called Bulls and Bears Newsletter Daily, where you're going to get an updated list of this every single day, as well as access to the app over time. We're still finishing up exactly how we're going to do payments and things like that, but just wanted to share this with people who are interested in how we look at the market. So yesterday, if you think about it, this individual indicator, what it's doing is it's tracking the S&P 500 holdings. And when a tile is red, that means it flipped bearish. And when I say bearish, what I mean is on the shorter or on the longer term indicator. So if I look here at SF, right, which I know is the one that we're looking at. I'll have to keep reversing this back. We look at SF here. What I'll do is I'll just take a photo of this so I can pop it on the screen. We'll look at SF here. What we can see when we go back to the daily, if we look at this here, so it's the longer term sentiment indicator. Right now, so you see that day it flipped bearish. It's going to flip bullish again if it holds, because it's 2 days in a row for the longer term. Because I believe that the 2 days in a row at least is a good indicator of if you're going to get a move that's going to be sustained or not. So you can see that SF is flipped. We'll go back. DHR. Actually, we'll look at Costco. I want to look at Costco here because I know Costco is much more widely held, as well as it's just a brand name that people love. So we'll look at Costco here. Very interested to see how Costco looks, because people would say that it is a bellwether of the economy, or like it reflects, I guess, people's sentiment, because they're generally one of the things that people cannot pull back on, or when people buy in bulk, that's obviously a very good thing if you look at the longer term trend. I mean, it's up positive on the 1 year, which is interesting. It's kind of flat on the 6 months. It's up 13%. 3 months, it's up 4.7. It's interesting to see that it's been down recently because that kind of reflects that people will be turning towards probably more growthier things. I guess that's why the Qs are up so much. We can see here, though, that it's got 2.3% upside. It's got more downside than it does upside at the moment. Let's go ahead and look at the individual look here. It is positive above its 5-day moving average, or the 5-day moving average, but the 5-day moving average is still below the 23-day. Looks like it just went live. Yeah, it just went live because now the market's going to start moving. Now you can see that it still has go shorts. So, I mean, you do want to say that this bearishness you want to respect right now. You're bearish on the longer term indicator. You're pretty bearish right now in the falling bear in terms of the rolling sentiment. You've essentially been bearish since it looks like the 8th of August. And we look at the overall signals. You do want to respect the bearishness. You only see bearish indicators on the bear key 3 here. You don't see any bullish indicators. There are no bullish signals at all. It's only bearish signals. So you want to respect that when you're looking at Costco. Let's actually look at the trade range real quick. It's very interesting. So it's bouncing off the bottom. The bottom of the trade range is down at 250 or 525. Top is at 575. That's kind of nuts. When you look at the weekly, we've kind of come off the top of the range as well. The bottom is at 459. So you could respect this as an overall move. When we're looking, let's look at a third one before we go. And actually, I'm going to take one just from the previous day because I know that day that we were looking at was actually much more bearish, but I know yesterday, which was the 29th of August, was actually much more bullish. And I want to take a quick look. Let's look at Netflix because that flipping positive I think is great. Yeah, we'll look at Netflix. Now, Netflix is a company that people have been loving to trade for a very long time. And the reason why is just it has the brand name, it has the recognition, it has all the things that CNBC or Bloomberg or any financial media want to talk about. It's got brand, it's Silicon Valley, it's content, it's media. It's just people have a great feeling when it comes to Netflix. So when we look, it's essentially been choppy. I mean, recently at least, because you're 0% on the 1 day, but we'll see how that moves as the day fluctuates. On the 5 day, we're at 57 basis points. 15 day, 25 basis points. This is 1 month, 7 basis points. Do you realize how insane of a move that is for something that's probably worth? I mean, we'll look. I can see with the $190 billion. Can you believe that that's 27 basis points? That's nuts. And then you think about it, 3 months, 6.5%. 6 months, you're up 44%. So the big moves have already happened, and now you're just consolidating. Which you can say if you just look at the returns along with the chart, obviously. The correlation to the VIX, I do like that it's a negative 63. So as the VIX is falling, if the VIX continues to fall, and you can see the correlation to the VIX has actually continued to get get more negative for Netflix. It's actually a really nice setup. You can see it's at 431. It's still got upside at 451. You could see downside to 406 potentially, but the way that the stock has been moving very recently, you're starting to get the idea, and even the sentiment is flipping up on the daily, which is good to see. The volatility is a little weird, I will admit. It's plateaued, and now it's still negative. So now that it'll be weird. You'd want to see this actually stay more negative for longer. You want to see the correlation stay like wide like this for a long period of time. You don't want to see a narrow negative correlation because right now it looks like the volatility is probably going to start falling, which is good. You want to see volatility falling while the price is rising higher. That's generally a really good sign. But I think that there's a potential big upside here for Netflix just because you look at the short-term indicators, things have really gotten more positive recently because of the type of moves that we've seen. It looks like it's had some serious down moves. In the past month, it's been down pretty much rolling negative return for the past month since the 27th of July. That day keeps coming up because that's when the VIX essentially started to break out. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We give you 25 stocks to your inbox every single Sunday. Stocks between $5 and $20, stocks breaking out to 1-year highs, stocks breaking out to all-time highs. It's a great list to review on a Sunday morning. I'll talk to you soon.